huge lead on it. So Africa has the advantage of not having to re-engineer the wheel here when it comes to setting it all up. So that's the second point I wanted to make. And the third point I wanted to make is that somehow in this dialogue of need for financing, need for capital, need to diversifying our funding sources, what mustn't be lost is that this is not an either-or situation. Islamic financing globally today, I understand, provides as much as 20 to 30% of financing needs globally. So it's an integral part of the funding composition, if you want to call it that, and not an either-or component to it. And that must be therefore understood. However, like most things on the continent, what I wanted to highlight is that while globally 30% of the funding mix is coming from Islamic-based financing, in Africa it's as low as 3%. Right? And only 3 countries, really, Nigeria, Egypt, and South Africa, have really done anything significant around it. There are a few other smaller countries which have done bits and pieces, but nothing to really write home about. But what is fascinating and what is interesting and what must be remembered is that these 3 countries, they have gone about it in different ways to tap into the Islamic financing route, and they have been successful. Like South Africa's last sukuk bond, I think was 1.8 times oversubscribed globally, which tells you that there is a demand and there is a supply, and that therefore has to be leveraged. Nigeria, interestingly, allowed itself to look at sukuk financing more as a domestic solution. So in Nigeria, the sukuk issuances that's taken place, I think around 6 or 7 have taken place. In total, close to $500 million in total has been raised. And that has been primarily, in fact wholly, domestic focused, Naira based. But what has been interesting with the sukuk issuances in Nigeria is the Debt Management Office has systematically allowed and encouraged retail investors to come in. And this is a very interesting development. Why? Because retail investors, consumers, do need saving options, do need to be able to invest in the real economy, and the sukuk-based financing has provided that. So this is another dimension that must be borne in mind about how to tap into domestic market to Islamic funding structures. So very quickly, if I can bring it all into a bit of a 30-second conclusion, I think Islamic financing is there. The supply is huge. A lot of it is coming from capital surplus regions like the Gulf. The Gulf countries have a desire and a requirement to invest well their own surpluses and diversify. They are looking at financing conventionally and also through Islamic structures, and they also have their own requirements around food security and geopolitical interventions that is encouraging them to invest in Africa. So it's an opportunity for us to tap into that. The second point I'll make is Islamic financing, the way it's structured with all its ethics, all its rules, all its conscience, all its longer term visions that are attached to the whole moral principle of Islamic financing, particularly is very well suited for infrastructure financing and housing finance, which again is an area where we know we have a huge need. I'll stop here, I can carry on, but what I'm basically saying therefore is you know, there is an old statement that nothing is stronger than an idea whose time has come. And the idea of Islamic financing providing a lot of funding solution to the African continent has been around for a while, and I think it's up to us to tap into it because it is ready, it's willing, and we have to find a way of tapping it. Thank you.
Round of applause, please, for Sanjeev. Thank you so much, Sanjeev. We appreciate your comments, and very importantly, we appreciate those new points that you brought onto the conversation, in particular those country experiences, and very important, like you said, there's no one size fits all. Not one institution can do it all. Thank you so much, Sanjeev. Stand by as much time as you have with us here on this first panel. My panelists, I'm sure we all heard Sanjeev very loud and clear, and I just to take about 3 points from him in terms of the number of players that we need in the market. Against Sanjeev was saying, look, the more the merrier. Then the products. And then, of course, importantly, the retail angle of it. And then the various sectors in which we can make very quick impact. And I love the issue you talked about earlier, one of the panelists, about the funding that was done for housing. And I think housing deficit across Africa is so huge, and how we can develop Islamic financing options to reach people very quickly. But more importantly, I think people will feel more inclined if they are part of the solutions, as part of the beneficiaries. In other words, put your mouth where your money is and your money where your mouth is. So if I'm investing and I'm seeing the benefit of it, I think it goes both ways. So, but let me start with you. I'm going to come to Agnes because she's bringing the whole trade into the conversation and access to that. How we can use Islamic finance to intervene in the EFCFTA, which is the new baby, the court that we have on the continent. In terms of the what Sanjeev said about getting more players into the market, how do you think we can bring that on board? Would you market institutions like investment banks, not just the traditional commercial banks and others? How quickly do you think we can get perhaps regulatory environment easy for them to be established and to intervene?
Thank you very much. I think Sanjeev has raised a very pertinent points. And I'll say the industry in Kenya, specifically on the region, is more specifically in Kenya for the Islamic finance market. I think currently we have about few banks that are fully fledged, commercial banks, about 3 of them. Quite a number of windows. We have joined into the Islamic investment banking space last year, which is something that actually we started. We have one, I think, the Takaful insurance company in the country. So a few microfinance, Islamic microfinance institutions actually now coming on the table. I think we have one deposit taking and a few other credit ones. So it's a very young industry. If you also look at the other side of the pension fund, where actually most of the fund or the cash is, it's actually been non-existent. And this is an actual space that we're trying to see how we can provide a solution for. So one of the ways, I think, as Sanjeev has said, quite a number of countries in the region, whether Cote d'Ivoire, Nigeria, they have actually issued quite a number of sukuks and, in that sector. And most of this, if you look at them back, is quite a number of them were supported or guaranteed or in a way facilitated by the, international development banks. So I think one of the ways that we'll be able to develop and advance that agenda here, especially in more social impact projects like the housing and the environment fundings, is for the international institutions, the DFIs, to come in and support these institutions in either guaranteeing or providing the necessary backings as a start to encourage the market, basically to start and push them to the next level. The private sector is actually doing a lot in terms of issuing the sukuk that we talked about, whether the corporate levels, whether but I think there's a lot more that can be done when both the government from a more deliberate push on it and also the DFIs in terms of coming in and supporting, both in terms of putting their funds in, so that when the local players or the common retail person sees that there's sukuks that are actually trading and they are in there, you'll be able to encourage them now to put in their fundings. If you talk, we have actually been engaging most of the Islamic banks the last few months in terms of providing them alternative solutions in providing for the liquidities. And one of the things actually now when we're talking to them is helping them or trying to link them up with sukuks that are actually out of the country or most likely out of the region of Africa, either in the Middle East or issued by other regions. So I think by that, when we establish local, robust, sukuks that actually are probably trading in the global market or in the stock markets, then it will also encourage all the players from the retail to the other institutions in coming in and investing. When the DFIs or the global, big banks come in and, also guarantee, you'll encourage the pension schemes and all those kind of now also coming on board and trying now to invest, into this thing. So I think that is one of the ways that we can be able to encourage that, inshallah.
Thank you so much. Thank you so much, Bimal. I was going to throw that straight to in terms of the DFIs. At FSD Africa, I'm sure, look at the big DFIs, whether the TDB or Afreximbank or the FDB and a few other regional institutions such as the ECOWAS Bank for Infrastructure and Development, the AFC and others. How much would you like to see from these big boys, in a manner of speaking, support what the various regional institutions and organizations and government and sovereigns would like to do to raise the awareness, to raise the level, bringing in their weight at that very top level, and then begin to trickle down a little bit, while we also see the local support at the base level?
Thank you. So I would like to raise 2 points here. We already have the Islamic Development Bank, which has been supporting Africa in many issuances. They've supported Egypt, Morocco, and even other countries. But I think one of the things which is very important, and this is from my own personal experience, is understanding of the different products. And unless this is made like a national priority and it is owned. Climate issuances came to Africa, they were mainly focused on the developed markets because they were the first to own it. Now in Africa, we have seen a lot of capital being raised. I've worked on projects where we have raised more than $1.2 billion in climate and sustainable finance. And I think the opportunity for Islamic is even bigger when you combine it with the green aspect or the climate aspect, because it has the responsible investing angle, plus the major focus is the governance bit. Unfortunately, the ESG that we have spoken about for long, you know, in Africa, the governance is really lacking, yeah, in most African countries. But if you look at in the developed markets, they have the governments, but they don't really seem to have the environmental aspects. We in Africa, we have that. We have natural resources, we have natural assets. So if we can, you know, complete the G, which is the governance, through the Islamic products or instruments, then Africa can be actually the #1 market, in my view, when it comes to such kind of products. And support from DFIs will definitely come. Right now, some of the DFIs are actually investing up to 30% of the issuances. As long as the structure is well arranged and they have the impact bit of it. Even from a social angle, we have seen a lot of women-led businesses. So Islamic finance can also have an instrument which is mainly targeting the women population. And this can really fly high. We have seen in Morocco, they issued the first gender bond, raising $95 million. And that's Morocco is an Islamic country. So there is a very big potential for Islamic products. I think the other thing we need to be really cautious about is in some countries, they don't prefer using the Islamic word. But there are other words like participatory financing, interest-free financing, which can actually attract or mobilize the financing or capital that we're looking at. When it comes to retail investors, some countries are very much active when it comes to retail investment. So for example, in Tanzania, Tanzania in the last 2 or so years have raised more than 750 million in sustainable and green bonds. And most of them has again been supported by the retail investors. It is not the same story in Kenya. In Kenya, the main investors are institutional investors, which are mainly pension funds, insurance funds, and maybe some sovereign funds, which don't really exist at the moment. So if you look at from the pension funds angle, you know, we have trillions of dollars in pension funds invested in Kenya. So at the current exchange rates, we are at about $12.5 trillion of assets under management in Kenya. And even if you get 10% of that into Islamic finance, it's going to make a very big difference, an extremely big difference. But are the people who are responsible for providing that financing, do they own it? Do they understand it? And are they willing to provide or follow the governance structures or the principles which come with it? Because Islamic finance is ethical financing. Yeah, we all know that we're looking for the good of everyone, not just for one person. So I think those are the things which needs to be really instilled, and also taken priority at the national level to some extent. Like, on the climate side and the green side, we have the Green Economic Strategy Investment Plan 2030. Why don't we have participatory finance or Islamic finance strategy for the next 5 or 10 years? This is going to really drive the markets, and we will have more Islamic products into the market, raising capital. Thank you.
Thank you so much, Vimal. Give him a round of applause, because some of the things you spoke to were part of what we saw in Nigeria when we were trying to step into that waters in terms of how do you describe it. And then we've got about 2 banks, non-interest banking, one is listed, and I think about 2 or 3 outside the market, and they're doing quite well. One of them, Lotus Bank and Investment, Capital Markets, done a whole lot relationship with Islamic Development Bank in Riyadh. They were there at the annual meetings, which was just about 2 weeks ago, and they've done additional between $50 and $100 million. I think about 2 or 3 Nigerian banks were there, and they were pushing a whole lot into the Nigerian market through the Islamic Development Bank and a few others. So it's already happening at the commercial banking level and also at the government level. Of course, there were initial bit of resentment at the start, but the government really pushed it, and that was it. And the sukuk for road construction, whatever, had actually been in everybody's face, and it's been a good example. I think if you point across other countries that East Africa or Kenya could actually bring about. I'm going to go to the panel, to the audience for a few points, but let me quickly, the last two of my panelists on what Jafar talked about, retail investors. Let me ask you, Farouk, about what you think on the ground we can get on board. Yes, the mindset change is there now. It's been reiterated, become more responsible in terms of how we manage resources. But again, we will need to find this money, and someone has to lead, both the public and the private sector. So how do we have a marriage of these two, and so that we can move very quickly?
Thank you, Boston. I think this is a very important point that you raised. Let me give you the example of Kenya. In between 2016 and 18, many of you will remember that there was a project management office for the government of Kenya, under the auspice of National Treasury. I, was the lead, consultant on that PMO. And thanks to, FSD Africa, who provided, the technical and financial assistance, for that PMO. In those 2 years, we actually managed to do a lot of work. If you remember, many of you were engaged in that stakeholder engagement that we were continuously having, the capacity building that we were doing, and also, I think the key, what shall I say, result, that we actually got in those 2 years were, the inclusion of the legal provisions in Finance Act 2018, if you remember, that actually provides, the legal foundation for sukuk, for, different types of products, and so on and so forth. There were a whole lot of other amendments to the regulations as well, including, the taxation issues that were addressed for the VAT parity, for land stamp duty, and, so on and so forth. So all those things have been actually ingrained now, so we have the primary laws that were done, and that was actually a step change from where we were operating just by way of an exemption given by the Central Bank of Kenya to start launch these Islamic banks, and just undertaking their operations and so on, to a fully defined primary law where everything is recognized, the legal foundations are there. I think the next step, eventual step now, is actually go to the secondary, laws, and that is by providing regulatory and supervisory frameworks. I remember, I have my colleague from PMO and gentleman Justice Agoti from the CMA. We prepared a regulatory framework, for the capital markets. Islamic capital markets, but that was just for Islamic capital markets. What is still missing is, the regulatory frameworks for, Islamic banking, for, the SACOs, For the pensions, I had a meeting with the RBA the other day, and I was pleased to know that there are two major Islamic pension schemes now that are operating Sharia compliant, but they are still having issues with their regulatory and supervisory framework. Same is the case with Takaful as well, and so on. So this is the eventual next step that we have to go to. And again, this is not one person's job. This is a collective effort that is required, and it's always driven, Boston, from the top. Actually, we can have a bottom-up approach as well, but that will be very, very long process and tedious process. So always bottom down is actually working best. And in Kenya, we observed that, we witnessed that, in those years before COVID, there was a very strong political will. The support that we received from the National Treasury, from the Cabinet Secretary, was actually very, very good. It was exemplary. And hence, we reached, all those, we managed actually to accomplish all those things. What went wrong after that was actually COVID, that derailed, all the efforts, and, things did not work to, the plan. And after that, I think, there has been a gap. But I'm hoping that with, the life coming back to normal, and, all these issues coming up again, and this, never-ending debate of, funding sources and, the funding gap, etc., we have to bring all these things together. So on one hand, it has to be, the effort on the regulatory, that enabling requirement that is required, not to, provide Islamic finance any advantage per se, but at least providing a level playing field and giving it an equal opportunity as conventional finance. And then on the other hand, working with the partners. And the partners, I believe that we already have, the likes of FSD Africa, who are, have been on the ground, very much engaged with the stakeholders, providing all sorts of technical and financial assistance. But then also, the capital providers. So Islamic Development Bank has been mentioned, a few times since this morning. We work very closely with them. Boston was mentioning Lotus Capital from Nigeria. I met these people in Riyadh just a few weeks ago. Africa is being supported big time by Islamic Development Bank. And although Kenya is not a member country, but Islamic Development Bank is still, willing to provide, the support, not only in terms of technical, but also, the funding actually. So they can provide funding. Similarly, there are other organizations as well, the multilateral, organizations that are willing to provide. I was actually a bit surprised. I have attended the African Development Bank annual meetings this week. And yesterday, I had two conversations, one-to-one conversations. One was with the chief economist of the African Development Bank, and then later in the afternoon with the CFO of the bank. And my question was very simple to both of them, that when is African Development Bank going to offer Islamic financing solutions to its member countries? And because to date, actually no transaction has been done. Both of them, these individuals, they were very receptive, they were very supportive, and they surprised me with something, with their reply. And they said, we are happy to do it, we just need the member states to express their need, express their demand. So I said, well, this is quite strange, because at least half of the member countries of the bank are Islamic countries, and even those who are not, there is still a high demand, and there is a need, and there are fund providers, elsewhere who can also partner with AFDB. So there shall be something. So now they have promised that they will look into this, and they are happy to have further discussions with us. But what I mean to say here is that I think there is some, sort of, what shall I say, some pressure shall also come from the beneficiaries as well. So the countries that are into this, challenge of funding gap, and especially when it comes to climate change, then, we have to be, I think, a bit more, assertive that we need these solutions, and the banks are, these capital providers are in this position, so they need to partner. And yet, if a certain bank cannot do it on its own, then definitely support is available, from others. So I will also give you the example of, other multilaterals. So, Asian Development Bank actually, who has invested very heavily in Islamic finance over the last few years. We have been working with them in Central Asia, in the Far East, etc. Philippines is another country that is actually very similar to Kenya. It's a completely different region, but it's a primarily, Christian country, and with a small Muslim minority, but, going through almost the same trajectory as Kenya. And in the last 4 or 5 years, they've actually managed to do a lot more than Kenya in terms of, bringing the capital and so on and so forth. So there are examples that can be, I think, very inspirational, and, it needs a little bit more of coordination at all levels, among the stakeholders in order to materialize all these ideas that we have had for many years, and we have discussed them many times. But now I think it's time to move to action and to have a more concerted effort. Thank you.
And that's the man I call the mindset change preacher. Give him a round of applause. You got a mindset change from the EFDB. Thank you very much. You've got to be Guyana for the Afrexim Bank in about 2 weeks, so you've got to preach to them also at the Afrexim Bank. We'll just get you the mindset change ambassador. Let me just give you 1 minute, Jafar, very quickly, to sum up on this side, and we'll come to Agnes so that we can go to the audience and manage our time a little bit with a few interventions from the floor.
Thank you. For a country to realize meaningful economic growth and shared prosperity, there is need to have a very vibrant and a deep and well-developed financial markets. And for you to have a financial market that you say is well-developed, it must actually also have the component of Islamic finance. And for you to have a meaningful Islamic finance market, then you need to have the entire ecosystem well-developed. That is from the banks, the capital market, insurance, the savings and credit cooperatives, and the pension fund. Because they all actually work together in a way that synergies are created to have the meaningful impact expected out of Islamic finance. And for you now to have also, you say that you have a meaningful economic growth, shared prosperity, because you can have economic growth with, that can also be said to be jobless growth that has no impact at all. So for the Islamic finance to be meaningful, then it means the entire ecosystem must be developed. How can that happen? It can happen by a number of ways. One is, of course, to have an enabling regulatory environment, regulatory legal environment. Brother Farouk had just mentioned that, out of the project that was undertaken way back in 2016, 17, 18, we achieved just a component of what we had intended to achieve, and that is on actually tax neutrality, forming the basis or the foundation for, the take of Islamic finance in this market. One challenge we have in Kenya today is, yes, we do have well-developed financial system. Then we also have Islamic finance institutions that have also come in. They've been in existence for over 2 decades or close to 2 decades. But they do have a number of limitations. What are these limitations? One is we do not have an enabling regulatory and legal environment. That's number one. Number two, we also do not have standardized approach of what is considered to be Sharia compliant or what is not Sharia compliant. What does that do? It harms the market in undermining, confidence levels of the stakeholders, particularly the consumers. That erodes the confidence levels in these institutions or these products because of lack of standardization. Number three is we do not have a mechanism to even be able to understand who is qualified to speak on Sharia matters or not. Then number four is we do not also have our learning institutions or institutions of higher learning that have developed curriculums that speaks to the needs of the industry by giving us, the talent that the industry requires. Then the other challenge that we do also have is financial literacy levels are low. Forget about even Islamic finance, even the general finance aspects. So there's need to enhance or empower people to understand what Islamic finance is, because today in Kenya, if you stand up and talk about Islamic finance, many think that is only for Muslims. And the Muslims think it's only for charity. So in between, there are confusions in that aspect. I know there are issues of how do you brand Islamic finance. In some of the Muslim majority countries, they refer to it as participatory finance. Others call it alternative finance. Others call it interest-free finance. But the goals are the same. If you're able to get a value-driven financial system that is transparent, it actually is fair, and has an accountable mechanism for the benefits of all the parties involved, that can really work. And the other challenge that is there is, today, I know we haven't said it publicly, but we do have institutions that have challenges with the interpretation of the Sharia-related contracts, because our legal system does not recognize Sharia as a matter of that. The only beauty is, when it comes to Sharia matters, the contracts in Sharia is structured in the Sharia manner, they are all actually on the basis of, the contract law. That's actually what works. But when we do offer, financial services or facilities of financing for customers, in the letter of offer, it's written the laws of the land, applies. But yet the law of the land does not take into account the basis of, Sharia that underpins the contractual obligations that have been set. The other bit that we do have is, we say for Africa to develop, the engine of economic growth is small and medium enterprises and youth or women-led businesses. And one challenge they do have is issues to do with access to finance. And the beauty thing, the beauty with Islamic financial, instruments or the approaches, you could use, the lease-based approach. You can use the partnership approaches. You can use equity-based approaches. All these are some of the most progressive approaches that can be used for financing. But the challenge is, we are using only, the debt financing aspect, which is, the murabaha that's mostly, applied by financial institutions up to 70–80%. That is not in line with the true, spirit of, if you have to do the true spirit of Sharia financing, then equity, the partnership will have actually worked very, very well. But the challenge is the trust levels are low. Where the trust levels are low, financial institutions will always try and cover themselves, because what they are giving as financing are not their own money. These are depositors' funds that they normally advance or give it to customers. Then we need now to have people to have integrity and be able to have their conduct in line with what the Sharia dictates. When you do that, then they'll be able to be a way where we're able to bring down the cost of doing business. The other bits that we need now to do is research. Because every evidence-based policy-making approaches will always work. I'm here to see where a research paper is done or published annually that speaks to the gaps of Islamic financial institutions or the Islamic finance markets in the country. So that we are able to see what interventions can be done or what approaches that can be done, so that right mechanisms or policies can be put in place to address some of these issues. And the other bit is, of course, institutional committing to making, let's say, capacity development. Today, I know Gulf African Bank, when they opened their doors in 2008, 2009, they had a number of conferences and seminars that they actually conducted. And that indeed helped in raising awareness levels and helping people to understand what Islamic finance was all about. But unfortunately, it was not sustained. And this could be because it's too much for one institution to do it. But we do not have a shared platform as Islamic financial service providers in this country where we work together to move in the same direction, in the right direction, so that we are able to we could compete on the basis of making returns and creating shareholder values. But there's need actually to come together to develop the entire ecosystem and be able to even work and face the government in helping us overcome some of the challenges that we have collectively. Thank you very much.
Great ideas. A round of applause for him. And I'm having a takeaway from there, personally, in terms of research. And I'm not too sure that, sorry about that, that even with all that Nigeria's been able to do, the area of research is still really lacking. And I think I'll take that back home for our own part as well, because you need that not only for the government, but for the private sector and other institutions to really see the numbers and be able to see the issues behind, the facts behind the figures, and why and how we can do more. Thank you very much for that very major point. Let's give Agnes just 2 minutes. I'm sorry, I've got to cut down a little bit on for sustainable time management. She will speak on Africa's regional integration agenda and access to trade, and why that, where we can bring the Islamic finance intervention in.
All in 2 minutes?
Yeah, 2 minutes.
Thank you very much, Bosun, and thank you to fellow panelists for driving this conversation. And Vima, you alluded to women traders or women and access to finance, and Jaffa too has highlighted the role of the importance of funding SMEs, and I see an opportunity there for Islamic finance. We're told at conference after conference of the African continent moving towards an integrated region where we trade together, and that the future of the continent is when we work together better, right? But we know how difficult, as businesses represented here, how difficult to access it is, even as established businesses, to get finance anywhere, and the cost of that. So you can imagine if 80% of African traders are in the SME sectors, they have no way. First, most of them probably are financially excluded. Secondly, most of them are probably digital financially excluded, and they wouldn't have any way of trading. So I believe then Islamic finance has an important role to develop products, come up with innovative products that are targeted to this group of SMEs in the continent. And what can we do? I think with different institutions represented here, I think it would be incredible to see products, trade finance product, or a fund that is targeted, trade finance or climate finance fund that is targeted to these SMEs. And I know we talk, and if you look at AFDB and IMF of the financing up $120 billion, I think they say, African Development Bank estimates $120 billion in terms of trade financing. And this can be, we think we're talking about $200 billion or to 1 trillion annually from zakat, right? If there's so much money there, then how can we, as institutions or corporations, tap into this gap to fund Africa's trade integration agenda? I think for me it's a question to throw it to the table and encourage different organizations represented here to find ways or come together to find solutions. Jaffa, you talked about research, and I think I will have to plug that Vima has written, has published about Islamic finance gap in the region and what is required for us to achieve the goals. And I think, Jaffa, you've written a book also on Islamic finance. So I think there is a lot of conversation, there's a lot of information out there, but it is now moving those conversations. And between us, 2016, 2018, we've all been holding seminars and convening just to try and get these ideas and to move them to actionable position. So in terms of Africa Free Trade Agreement, yes, Islamic finance has a role to play, but how can we do that is developing products that are targeted to this SME sector.
Thank you so much, Agnes. Give a round of applause. I think that's a very big one. We'll take some of this up, and I think institutions that should take this up, all whether it is the FCFTA Secretariat or the Africa Trade Fair and the Afrexim Bank, to have the kind of products that you can deploy to fast track intra-Africa trade, again, because you've got women and others, SMEs within that, between the top and the bottom of the pyramid of the trade ecosystem in Africa, so that we can quickly move things forward. You want to?
Yeah, I just wanted to add to what she said. So we have also published a toolkit on Islamic finance, which is providing a complete guideline as to how sukuks or any kind of product in Africa can be issued and what kind of guidelines need to be followed. So this has been there for about 4 years, if not more. We worked together with IFAS on that, and it's going to be one of the documents which can be easily accessed. There is no charge, it's free of charge. And you know, those who are interested can actually increase their capacity and understanding using that. Thank you.
Thank you, Vima, for bringing that free of charge. Thank you very much to the room. Thank you. Thank you. I know there is no free lunch, even in Freetown, but I'm sure that at least we can use some. If you use FSD research, I'm sure when you contact Vima, I'm sure you're going to get a bit. Let me go to the floor so that we can manage time very quickly. I see hands up already in the room. So let's take just about a roving mic. If you just give us one very brief comment or question, and then so that we can get on to the second panel, take that very quick break. Thank you very much.
Assalamu alaikum. Sorry, my voice is a bit down. Just before it escapes, Agnes touched on zakah. I've been thinking about this for long. Zakah is not just to feed the poor, it's supposed to be for empowerment. So please hold my hand and let's see how we can move zakah to empower people. But at the same time, we should realize that we are in profit. So we should try and see how can we first own the zakah, then when we give it to people who have got brains but no money, and have got ideas but they need the money, and how we can partner with them to make sure that zakah empowerment becomes sort of a profit-based, at the same time owned. Because in zakah, if there's no ownership, then you cannot work with it. So I'd really appreciate if you can sit down and have a topic and sort of like go down that lane and see, because Zakat Kenya right now is working very nicely. We have got other institutions. We can partner together with Islamic finance and make sure that by next year, we have something that will now make people come forward. And the way my brother Jafar said, most people think Islamic finance is a charity handout. We should try and move that mindset. And ownership of these ideas, the ulama are lacking in this. Because what I've gone around, I've seen those who understand Islamic finance don't understand Sharia. Those who understand Sharia do not understand Islamic finance. So should we come up with some sort of training? Because workshops are not enough. Some sort of training that are going to empower this ulama, because once the ulama own this idea, my dear, you will run with it.
Great thought. And I think we have market institutions and others in the room that will be able to help to do that. We need something more, not just conferences or seminars, we need something like a training that is very regular, on a regular basis. Table first, then we'll come to this side of the hall very quickly. Thank you very much. Appreciate that.
Thank you very much for this opportunity. My question, first of all, I have two questions. First of all, I think I direct it to Omar, SIB. I've not gotten clearly the kind of products you're offering apart from investment banking. I understand there is the Mansa X, and then there's the Mansa X for Islamic. So I've not really gotten what other products you're offering to the retail investors. I'm actually in the space of financial literacy. I've been doing this for years, and we also have a problem with working with institutions like FSD, SIB. It's always a tough thing to approach these institutions to work with them, because we provide these trainings, and myself, I'm not so much aware of the Islamic products, actually. I do not understand most of them, but I train a lot about these other products in the capital markets. So how do we work together with these institutions? How can you make it easy for us who do this kind of trainings in this space to get the retail investors? Because you mentioned here that there's a lot of that penetration in Tanzania more than in Kenya. How is that so? Is it because of the majority of population there? Is it Islam? I could be wrong. Is it because there are Muslims more than in Kenya? What is the what could be the reason why these products are more penetrated in Tanzania than in Kenya? And I believe financial literacy is one of the reasons. I myself, I train a lot about these products, and I don't have a grasp of the Islamic products. So how do you make it easy for people like us to work with you so that we get it to the retailers? Because you can have these talks, these workshops, everything like he has said, but down here at the retail level, people, the information never gets to them, because these people want the information of these products to be broken to them in simpler ways, not the way we are talking here, and that is our work. But we need to work with you so that you make us get the information right to break it down to the retail investors. So how can you make it easy for people like us? I think that is a question that Vimar, you can maybe touch on that as well, and Omar on about the SIB products. Thank you.
Oh, thank you very much. I'm sure some of these questions will dovetail into the second session. I would like to have more of the market institutions take some of this, because I'm sure they have some of the primary responsibility aside other government agencies as well. Yes, okay. Okay.
Thank you very much. And thank you for giving me the space to present the product that we're offering. I thought we were talking about that's why I didn't go into details of the product. But as you said, we're offering about three services at SIB Najah, which is the Islamic banking division of Islamic Standard Investment Bank. One of it is the fund, which is a Sharia compliant fund. We call it Mansa X Sharia. denominated on both currencies, that is the dollar and the USD, for people who are also earning their incomes on dollar. And the fund is investing in multi-asset classes in the global markets, where we're investing on behalf of our investors at the global markets. We have currently been approved by the Sharia board about 9 different asset classes that we're using to invest the funds. And the returns we get or make from that investment, we pass it on back to the investor, whether it's a retail investor, high net worth individual, institutions, pension funds, waqfs, zakats, institutions, all of them. So we're providing anyone who has liquidity, whether it's personal savings or any other funds that actually you're keeping for liquidity, to be able to invest in a Sharia compliant way, where now we are providing you with vehicles or portfolios that are compliant with the Sharia. So, and it's open for all, categories of investors, as I had said, whether it's retail institutions and institutions that are probably waqf institutions, zakats, and all those kind of things. The other thing also we're doing is we are providing access to the equity markets at the global, both local and the global also levels, where we're providing halal equities or halal stocks for both retail and institutional investors to be able to invest, where we help them in terms of the screening of the different equities, and also manage the process for them to make sure that the equities actually that you have invested stays, or that portfolio stays compliant from a Sharia perspective. And where there is any impurities on it, we also help you with the income purification for the investments or for the returns that you get from those kind of investments, whether it's sukuks or equities. We also do the corporate advisory, where we help institutions, Islamic institutions raise funds, mergers, going public, all those kind of things. And when we're looking of raising funds, we are talking of Sharia compliant ways of raising funds through, sukuks and other vehicles that we normally, advise. So we do all those ranges of services at SIB Najah. Thank you.
So thank you very much for your question. So why the Tanzanian retail investors are quite active? It's mainly 3 things. 1 is ownership, 2 is trust, and 3 is openness to new products. If you compare that to Kenya, all those 3 are not really there. I personally conducted only 2 trainings in Tanzania, one in 2022 and one in 2023, and we have been able to raise more than $750 million. In Kenya, we have conducted, I don't know how many trainings since 2017, and in total we have only raised about $75 million. So I think it's also about you owning the products in your country and investing. I think ownership and trust is very important, but also openness to new products. In Kenya, I think the mindset has to change, the business as usual mindset. People are more cautious, and there is a reason behind why Kenyans are more cautious, because people have lost money in the past. We have seen 2 banks having corporate bond defaults. And since then, the corporate bond market has been really dry until 2019, when the first green bond was issued by Aecon Holdings. So that is one thing. And then constant awareness and communication is very important. If you look at the regulators, they are also very proactive in vying for such products. We don't see that proactiveness in other markets. And if I compare to Kenya, it's just the conventional instruments. And again, yes, we have the Green Economic Strategy Implementation Plan in Kenya, but how many institutions are actually having a strategy, corporate strategy, looking at sustainability or Islamic finance? So I think for retail investors to come into the market and participate, obviously you've mentioned about the literacy or awareness, which is very important, because you will not put your money in something you don't understand. It's as simple as that. But also the constant communication and confidence for the retail investors to have in the issuer or the instrument which is coming to market is very important. Once trust is broken, it's very hard to earn it back. So I think that is very important for this thing to actually pick a lot of momentum.
Okay, you.
Yeah, so what we usually do is we had an Islamic finance program from 2016, which ended about in 2019 for about 3 to 4 years. And at that time, the concept was not really understanding here. So we had to get international consultants. IFAS, we worked with them. And we provided trainings, not only to regulators and the market stakeholders, but also to some of the investors who are keen on that product. Now, at this point, we are still thinking on our strategy because we are a donor-funded institution, and Islamic finance is something which is still coming up, not only in Kenya but even in the UK. We are funded currently by the UK government. So in that program, we have provisions for financial or trainings on that kind of agenda that we are talking about. And that's where we bring trainers who can actually and competently, train the audience for better understanding. A good thing I would like to mention in trainings is if the audience realize that whoever is training is not competent enough, then already the trust is broken there, because you're selling something which you don't also understand. You should be fully understanding what you're selling. And that is where, you can get the trust of the audience and ownership, as well as them becoming open to invest in such new products. Maybe Farouk can add to that.
Thank you, Vimal. Okay, that will be the last intervention quickly.
Thank you, Vimal.
Thank you, Farouk.
This awareness issue is a very common issue, not only in Kenya, around the world. Even the countries that have the highest levels of penetration of Islamic finance, even they are still having, awareness issues and to some degree trust issues as well. And of course, FSD Africa can organize, training workshops and programs and so on and so forth, but it's never going to be enough. And this is a constant problem that we are facing all the times everywhere. As an international financial, consultancy, we work worldwide, and this is an ongoing problem. Hence, what we have now done is actually we are currently working on launching IFAS Academy. That will be available online at different levels, for the general public, just for, general awareness about Islamic finance, the concepts, the theories, the practice, and the structures and so on, and also for the professionals. Of course, we will not be able to provide any product details because they are very specific to each market and each institution. But the idea here is actually to disseminate knowledge and to help people understand more. And because it's online, so it's easily accessible for everyone. And part of that will be also accessible, at your leisure. So there will be different types of programs available where you can go offline, and you can even download things and stuff and so on. So that's to help the emerging markets foster their awareness and their understanding of Islamic finance, and to help the people like yourself, the professional community, to be more competent and be more capable actually of selling the products, marketing them, and explaining them properly. Yeah. So this is what we are doing from our end.
Please, a very big round of applause for my panelists. Please give them a round of applause, please. May you stand up for your picture, group picture, and we say thank you very much. I'm sure we have a few more questions, but we want to quickly onboard the second panel, and then give everyone just about 5 minutes to go to the washroom, bring tea or coffee back into the room, and we just go on with the second panel, because we want to close as quickly as possible and on schedule. Thank you, thank you, thank you, thank you, thank you. Very much. Just let them take a group photograph. So we just have a 5 minutes break. Anyone wants to use the washroom very quickly? In 5 minutes, bring in the second panel here for the next 30, 40 minutes. Thank you, everyone. Thank you very much for being a wonderful audience. Thank you very much. If there are a few more questions, we'll take them under the second panel. 5 minutes break. Please just use the washroom, get extra water, coffee, and then we'll be back with the second panel. Thank you very much. panel, which is focused more on Kenya's Islamic finance industry, opportunities, challenges, and trends. I'm sure we've had a bit of that conversation already, so we'll just use this panel to focus a bit more on some of the granular details of what needs to be done in East Africa, and in particular the financial markets. And I would like to invite 3 individuals to join me here for the final part of this, so that we finish up on time within the next 30 minutes or so. Justus Agoti, Senior Manager, Marketing, Deepening, Capital Markets Authority of Kenya. Please put your hands together for him. Thank you, Justus, as well as Abdullahi Hussein, the head of SALI, CPF Financial Services of Kenya. Thank you very much for coming in. Agnes, I'm going to ask you to join us on the panel as well. Okay, so I'm going to sit down with my panelists, and I'm sure I would like to have more, some interventions from the... So, now we've heard so much about the principles of Islamic financing and the things that need to be done. Thank you. Sorry for. Thank you. Okay, Justina has, Agnes has delegated. Yeah. Oh, eventually. It's good to have you. Thank you so much. Thank you. Okay, so let me, this is more of a markets panel, and then one of the things we've seen in some jurisdictions is how market institutions will help to help raise the level of awareness, understanding of Islamic finance, whether it's Sharia compliant, the products, and all of that. And I'd like to hear first, and I always defer, as always, to the regulator. So I'm going to defer to the Capital Markets Authority of Kenya to raise the curtain on this. We have about 30 minutes strictly for this panel, so we need to take our first opening comments for just about 2 minutes each. Thank you. You have the floor, sir, Justus.
All right. Thank you so much for the opportunity. I'll be very brief, just to highlight a few issues from a regulatory perspective that I think would be of interest to the audience. First of all, I have to indicate that as regulators in Kenya are so keen to support this form of financing. And that has been evidenced by some of the workings we've had in the past, engaging Farouk, who was here a few minutes ago, and trying to push Islamic finance in the country despite some of the challenges that we continue facing. First off, just to indicate that the regulatory environment as it is as we speak does not prevent anybody from doing an issuance in the country. I think that is very important to note, that if and when you decide to do an issuance or raise capital through Islamic finance mechanism, nothing stops you from doing it. Of course, there was a new, the initial raft of reforms that was made, and we continue engaging to see how best we can address some of the, can I call them outstanding issues around regulation. Also to add that there has been some very clear feedback from the audience that this has been on for quite a while, and perhaps it's time now to fold our sleeves and start working. And of course, as it was said, Lindsay has already opened that channel for us. Also to note that there is feedback that there is a need for strategy on exactly how we need to do this. Question would be, who needs to develop that strategy? And within what timelines? Because speaking from a regulator perspective, ours is to facilitate you. We don't want to be the ones at the forefront of pushing for this. So as market players, what is it that you're doing to develop a clear map for Islamic finance, maybe in Kenya, maybe within the region? So 20, 30 years down the line, where do we see us from an Islamic finance perspective? And because they usually say, if you don't have a plan, then you're planning to fail, I think I'm throwing the challenge to the audience as market players. What is it that you want to have done? I wanted to conclude by giving some feedback on us having an ecosystem and not just looking at the regulations, all right? So an ecosystem would involve institutions. So which are the Islamic finance institutions we have in Kenya that perhaps are linked up with the relevant aspects of either raising capital or providing capital? 2, do we have investors? Where are they? Who are they? What is their interest? 3, do we have the infrastructure, the systems, the software, the hardware? Is it existent? 4, do we have the levels of awareness that we anticipate to have in order for buy-in to be a possibility? Then there's an aspect also, what products are we promoting? I'm talking about all these because when you talk about an ecosystem, it's not only one aspect. It has to be all encompassing. And regulation is just one aspect of the same. So the question would be, it is more of industry players doing their bit in order to ensure that we push this agenda forward together, rather than leaving the regulator to, to do the heavy lifting. Yet the rest of the industry is perhaps not ready. And I think that is where I want to pen off.
Justice, I'm going to ask a question later, which you need to think about, the handshake. The CMA is a government agency. So I'm trying to find out how much working relationship does the CMA have with other necessary government agencies. For example, if you have a debt management office and the Ministry of Finance, to ensure that you are the one representing the government of Kenya on the market street in the manner of regulation and policies. I want you to think about that. Let me quickly go to Abdullah Hussein, who's the head of SALIA, the CPF Financial Services. I'm sure your institution is involved in Islamic finance and services in Kenya. What's on the ground from what you do on a day-to-day basis?
All right. Thank you so much, our moderator for the day. Assalamu alaikum wa rahmatullahi wa barakatuh. CPF is a financial institution. Mainly, our main business is in the pension industry. But we have other subsidiaries I'll talk about later. But for the sake of the audience, I'll take just 1 minute to give a brief history of what the institution is all about. The institution was formed, I think, back in the day, 1929. No one, I think, in this room was born by that time. It was for the interest of colonialists at that time to provide pension for their employees at that time. Very quickly, post-independence, we transformed to local authorities pension trust. Now it was supposed to provide pension for the former local authority employees. Quickly again, we came to the county dispensation after 2012 declaration by the Treasury, I think, that all pension funds now should be closed down to new memberships, and provident funds now take over from that particular step. I think in 2013, now we came up with the county pension fund after the county dispensation came in now, hence the name CPF, County Pension Funds. Now this is strictly on the providence perspective because number one, there was regulations by Treasury to close down all the pension schemes to new memberships, so it will die a natural death from that particular state. But now going forward, there was need to provide pension now for the new dispensation now, which is the county dispensation. I think we took that up quickly, but I have the privilege of being in the fund from that particular time, and I think when I was sent to the region now, the northeastern region, I think you all understand that predominantly all the employees in that region are professed with the Islamic faith. And there was need now. When I went to the ground and speak to these people, there was need for us, number one, to provide pension, and number two, to provide pension ethically or a Sharia compliant pension product. So hence, I developed the first concept paper for the fund to set up a Sharia compliant fund. So we did a pilot project between 2013 and 2017 just to see the uptake now of the people, because As an institution, you understand that when you go to the top management with these kind of discussions, they tell you, show us that this is actually something that people need. And we got people to sign up for the fund, alhamdulillah. I think in 2018, we actually managed to launch the product. And fast forward, I can tell you today, alhamdulillah, we are almost at 6 billion Kenya shillings in terms of fund value. And the fund is growing rapidly at close to 1 billion annually. So we are looking at a fund that is going to grow very fast. I think it is one of the biggest now in the country, if I'm not wrong, in the region as well. So in a nutshell, that is what we do at CPF, and that is how the Sharia compliant fund came up. Thank you.
Thank you so much, Abdullah. Remember I said those who make money don't make noise. That 6 billion shillings man sitting next to me, and I was never aware who I was sitting next to. Thank you so much. Hassan Jude is from the Somali Stock Exchange, and I'm sure he's got a couple of experience to speak to us about the stock market and what his views are on Islamic financing, using that window to support the financing gap for Africa, not just for climate, but for infrastructure, transportation, housing for the poor, supporting the vulnerables in the various communities, and how they can also buy into these services, become owners of it. And I'm sure I love the last, my panelists in Burma talk about trust, openness, as well as ownership, taking ownership of these products, because it benefits them. It's part of their lifestyle, it's part of their living, whether they're working or they're into a pension age period. Yeah, the floor is answered.
Thank you. Okay, so Bismillah. Well, thank you. I'd like to thank the organizers of this event. Thank you, Bosun. And I'd also like to thank Agnes. I've known Agnes for quite a while now, and she had always that spirit of really contributing to the development of Africa, whether it's finance, media, or many other areas, as long as I remember. So just to give you a little bit of a background about the Somali Stock Exchange and the financing, the current financing situation in Somalia. We were the youngest, from what I know, from 2000. I think there was an event, the East Africa Stock Exchanges event. We were the youngest stock exchange in Africa. But I'm sure Burundi is coming up right now, and Ethiopia also is about to form. So, but it's still, when it comes to progress and development, we are still at that infancy level, if you like. When it comes to Islamic financing, first and foremost, I'm really glad to hear that this topic of Islamic financing has been brought up a lot in the last few years, and I think is a lot to do with the ESG and obviously the Islamic countries and Islamic economies also play a big part, as was mentioned earlier on, when it comes to contribution to the whole global economy. So for us, although Somalia is well, I would say predominantly or majority or 100%, if you like, close to 100% an Islamic country, you'd be surprised that the system that has been used, not only in Somalia though, but in many other African countries, has been a conventional financing rather than Islamic financing. However, if you currently look at the finance sector in Somalia, obviously it's all Sharia compliant, not because of the regulatory side of things, but because the people do believe in that. Of course, is a faith-based, and that's what they prefer. But that's largely linked to the interest-based products, and now in that case we're talking about banking. But when it comes to the wider finance, we are yet to really to explore many other products such as sukuk, or bringing the Islamic financing to the capital market. For us currently, we only focusing on equities. Now, one of my colleagues earlier has mentioned the gentleman from Abdullah from SIB, how they help those who are interested in finance products when it comes to vetting, ensuring that the products that they invest in, the equities that they buy into, are Sharia compliant. For us, it's 100% Sharia compliant, because all the listing companies on our stock exchange are Sharia compliant, Somali owned in fact. We're yet to bring foreign companies listed on our stock exchange. So all in all, I think what I can say is that we are we're glad to find out that when it comes to financial products in the capital market space, it's all at early stage, and it's something that we can grow with. So I think that's what I'd like to say. We are all on the same level, but it's good to hear just as from the CMA that Kenya is about to also work on these regulations and how that could be brought into the capital market. Thank you.
Thank you so much, Hassan. Give a round of applause. You know, what I'm liking to see is the collaboration and handshake across between East Africa and some of the Sahel countries to the Horn of Africa. And that's why I think Kenya is such a very big player here. So my earlier question, which I'll come back to, Justice, is about this, how to get the government to do a bit more. Folks will look up to the government institutions to bring some products to the market, and then market institutions, brokerage firms, and others could buy into that. And that will begin to spur the people, get them to talk about it with the people, get the retail investors also in. So what more would you like to see the CMA do, and what's existing in terms of the thinking within the Treasury and the Debt Management Office in that particular direction?
Yeah, thank you. I wouldn't want to speak on behalf of National Treasury because they are our bosses. But anyway, I'll just give you a quick highlight of exactly how the relationships are, so then you appreciate what exactly we're trying to do. Back in 2015-16, we brought in Farouk's team as a consultant to bring the financial sector regulators together, and of course under the auspices of the National Treasury to support Islamic finance in the country. So out of that, of course, there were a lot of consultations and sessions and stakeholder engagements for about 2 or so years, after which then we had the framework reform that he alluded to earlier. And that's what we've been working on as the basis that we can build up on in order to have Islamic finance get a foothold in Kenya. Just to also add that, yes, National Treasury is very supportive. The financial sector regulators, be it IRA, SASRA, are so very keen, but then they also would want to understand what is it that they need to do. And that is why I have to go back to that same point I mentioned earlier, which is, and I'm happy that we have SIB here in the room, because when you're an investment bank, there's a lot you can do in order to bring together the industry and have issuances come through for the regulators to approve. And so from a regulatory perspective, a lot of what we do is facilitation. So ours is mainly to wait for you to come and say, yes, I have this thought, there is this product I have, and I've structured it this way. Is there a way that we can have it incorporated as part of the capital market or circles or the banking sector products that can be sold out there, of course, while complying with Islamic finance principles. And then we'll have a discussion, because there are issues of, so do you have a Sharia board? Who are the people that are behind this? Where is the value proposition? The issues of, return on investment and all that. that will be a discussion that will be held after the idea has been put together. And so without the idea, it's hard for the regulator to, I think the only other thing the regulator can do would be to create some level of awareness as to what the product is about, depending on whether the budget is available. And of course, have collaborations across the region and have a discussion, say, under the East Africa Securities Regulators Association, just to, sell out the point to them that in Kenya, this is what we are doing. In Tanzania, this is what has happened. And for information, for example, Tanzania has moved quite fast, and it has had quite a number of issuances for bonds. Although, of course, Kenya took the first steps of doing some of those regulatory reforms to support Islamic finance. So, as regulators, yes, we convene sessions. In fact, the last session we had should be around about 3 weeks ago, thereabouts. And we had participation and engagements on, so what is it that needs to be done? And why we are doing these engagements is to keep that discussion alive, so that then we don't drop the ball, because it's been a while since we had the regulatory reform. The issue has been, what is it that needs to be done in order to jumpstart this process? Now, from a national treasury perspective, of course, we've been knocking on their door, because they're the policy formulators, to provide a guiding national kind of policy on, so for Kenya, what is our position on various aspects around Islamic finance, for example, on arbitration, right? If there are issues that arise between parties who are transacting and they have used Islamic finance as a basis, how do they resolve their issues? Of course, we know we have Qadhi's courts and we have all these others, but then also you need that guidance to be very clear from the National Treasury. There are also issues of charging of fees. There are issues of, for example, Sharia boards. Do we need to have, for example, and that's a discussion that has been going on for a while. Do we need to have, institution-based Sharia boards, or do we need to have one centrally positioned Sharia board that should be domiciled, maybe, within the National Treasury? And so those are ongoing discussions that would have to guide how we then make Islamic finance evolve in the country. The major issue that perhaps we would need to take out of this room is, one, that discussion needs to continue being held. And at some point, of course, the more you discuss about these points, the more it looks realistic. And once some of those issues are addressed, perhaps there will be a way people will see that this is something that has already gathered momentum, and therefore it needs to leave the runway.
Thank you so much, Justus. Thank you so much. Please. Just to find out if you have a desk on Islamic finance products.
Okay, a desk would be maybe a few individuals who are handling Islamic finance issues. Yes, there are. In fact, I'm part of that team. And so what we continue doing is mainly awareness, which is engaging various stakeholders in order to understand what is it that they want. I also wanted to add that there is an ongoing work around demystification of a book together with Jaffa here. CMA has been pushing for perhaps an understanding of, so what is Islamic finance about and how does it work? And so there is a professor from Malaysia who has published a very good book on Islamic finance, Q&A. So we are trying to domesticate the language in that book, so then we can kind of Kenyanize it, right? And I think they are at the tail end of doing the same. Other aspects would be more around stakeholder engagements and participations to ensure then people continue appreciating what Islamic finance has to offer. And I know there is a lot of room for engagement just to make people understand what it's about. Yeah, so just to answer you, there is a desk. I think there are 2 or so people who are in that, on that desk. But over time, as that form of financing grows, I am sure that resources will be provided in order to support.
Thank you so much. And I'm sure there are a lot of conversations, those of you who have an exchange and the regulatory authority can take up within ASEA, for example, get that to be a major focus moving forward when you have your regular meetings and the General Assembly. Abdullahi, are there new products, new offerings that you think the market is ripe to bring to the market from your end? And so that you can, as you know, regulators tend to behave more like parents of the bride. They don't tell you who to marry, but you gotta sit at home and say, until you walk through the door and said, Mom and Dad, I'm interested. They say, oh, really? You know, so the regulators won't say do this, but they wait for you to move, then they bring regulation.
Sure. I think we spoke about the financial ecosystem here before. I think in the insurance industry came in before us. I think also the SACCOs were the first ones in the market, also in the Islamic industry. The banking sector came in also. I think we are the last bones in terms of getting into the ecosystem. Maybe second last, SIB could be the last bone at the moment. But more products are still coming. But I would say that being the second last bone or the last bones in the industry, we have tried our best to come up with products to actually complement the same. Because currently we are suffering from liquidity management issues. And you know, from the regulation perspective, you're supposed to diversify your investments. I think when you sit with 6 billion shillings, for example, or 5 billion shillings somewhere, and then the only vehicle of investment is fixed deposit in banks. We are just moving them around from KCB, Sahel to Gulf African Bank to, you know, name them, Premier Bank. We're just moving them around banks. I think there's that concentration risk issue, and also at some point they were giving us the rate of returns that they feel like they should give, because they know that you can't go anywhere. There's nowhere else you can basically go in terms of getting those returns. So I think with time we thought about it and we developed products. I think the Lindsay Sukuk has been explained here quite much before I sat here. But we are the placing agents. We are the people who actually initiated that particular product for the market, because we also have the need to invest in such particular products. So developing the market is one of the key areas for us, because we believe that that is where we should all go if we want to actually have diversified areas of investments. So the coming in of, for example, SIB or investment bankers like SIB would give us solutions to liquidity issues. But I think it's an area that requires all of us to work together. I know most of the banks here are competing against each other. Investment bankers are competing against each other. But I think if you want to actually develop the industry to a level whereby we can all, because if we develop this industry, it's going to be enough for all of us. It's big enough for everyone. So if we develop a robust industry, I think it is something that all of us can benefit. Because at the moment, we're only tapping into a very small percentage. If you look at the pension industry, for example, even the individual pension plans, people are not taking it up because there's that lack of awareness that actually there is investment vehicles or there is pension schemes that can actually provide solutions that are Sharia compliant. So I think it's an area that requires a lot of coming together, a lot of putting heads together, a lot of discussions beyond the barriers of competition and the rest, so that we can all benefit from the same sector. Thank you.
Very much. Hassan, you want to say a word very quickly before I throw that to the audience?
Yeah, I just want to add more to a bit more to the products. Well, for us, really, it's a great opportunity for us when it comes to developing the capital market. And Somalia has recently joined the East Africa community. It gives us a wider market. But as far as products, so I think an area that we would like to focus more on is to look more into sukuk, and I'm very happy to hear that the neighboring countries are very interested in that, and also developing the debt market. And for us, sukuk, it would be very important product that the government and the whole people can actually take advantage of. So I think for us it's a great opportunity really to take advantage of. Thank you.
That would be great. Thank you so much. Let's go into the audience for one or two interventions so that we keep it within time, where it looks like I'm seeing some hands from here. Do we have a microphone? Let's go to the lady just by the door. Thank you, madam.
Assalamu alaikum. I'd like to throw the ball back to you, Justice. What would it take to have a sovereign green sukuk? It would, thanks to our host, by the way, for hosting such an important forum, it would merge with the needs of the stakeholders in terms of a product that is Sharia compliant and in synergy with the faith. So what would it take? Are there any stumbling blocks to that? And again, as Abdullahi just mentioned, they would like to, they have a concentration risk they'd like to averse. It would help on that too. The Islamic banks, they would like to have a liquidity management product too. We have hefty investors that lack where to place their funds. I think those should be considerations for the government to initiate a sovereign green sukuk. Thank you.
Oh, thank you so much, madam. I appreciate it. Yes, madam.
Thank you very much. My name is Luma Lasiulis. I'm an advocate in this field, but I'm also in dispute resolution, meaning arbitration. And, when you guys have finished your financing and contracting, and then, disputes arise in every commercial setup, and that's okay. Now, in terms of Somalia, sorry I've missed your name from the stock exchange. Hassan. I'm very happy to see young people like you taking leadership in such areas. But now tell me, Somalia is not a member of the New York Convention. And I think it was mentioned by Justas. When you look at the regulatory environment and the framework, and these discussions are good because they help us move closer into the area of working to an enabling environment. Now, Somalia is not a signatory to the New York Convention, which means that if I have an arbitral award following a dispute, then I can have the dispute resolved here and enforced against businessmen anywhere in Africa, including in Somalia. Now, how do we make this environment friendly for execution anywhere and for businessmen to have the comfort that I can trade anywhere and I'm able to enforce an award? Do we see that happening in Somalia? Because increasingly I'm working with the clients from Somalia. Thank you.
Those are two questions. We want to take a third one very quickly, and then we have let me move a little bit to the far left.
Good morning. My name is Ewart Salins. I just want to ask perhaps a more practical question on financing, and if there is an element or if there's space for Islamic finance in a blended finance model. So let's just look. Very recently, His Excellency the President, talked about the road to Mombasa, right? $3.2 billion, 30% equity, 70% debt. Mm-hmm. Now, on average, that's about $2 billion worth of debt. Right? Now, you could potentially finance that partially through capital markets and also the financial markets. If you were to access the capital markets locally, you would have to issue bonds and all of that. But could part of that $2 billion be financed by way of Islamic financing? And then, of course, the other question I would ask then is, then how would you deconstruct it? Because then there's ownership to the road, if I understand this correctly, right? So the first question is there space for Islamic finance in a blended finance model? And then practically, how would it work?
All right, thank you very much. Let me take just one more, and that will be the last one, so that we just take that very quickly. There's a gentleman by the wall. Do you still? Okay, so he has his hands up.
Thank you very much. Finally, I get to speak.
Mine is not really a question. There's a question at the end, but it's really giving a perspective from the Ugandan aspect. And I'd like to talk about three things very briefly, 30 seconds. One is regulation and development, the other is structure and domestication, and the third one is training and sensitization. So regulation, I'll probably put Ugandan's perspective. I've seen many people coming to say Kenya is now fully grown to have regulation and people should move. In Uganda, we have such regulation, both at the central bank level and also the tax regulation has been amended to provide for Islamic finance in Uganda. And as nascent as it is, we're making strides to make sure that that is actually enforced. On the issue of whether they have a Sharia board or a Sharia council at the central bank, Uganda decided to do away with the Sharia council at the central bank and only provide for Sharia boards in the different financial institutions. Again, we're still learning, and as we're learning, we hope we can share our knowledge with the East African market. We have our first Islamic Finance Bank, the very first in Uganda, opened last year, was inaugurated this year by the president, and that's Salam Bank from Djibouti. They have not issued any facility, they have not done anything. We are in talks to have the structures done. And that leads me to the next discussion on structures and domestication. It's interesting because I think the gentleman over there, I forget his name, he said, those who know finance don't know Sharia, and those who know Sharia don't know finance. And that has been the biggest issue we have. The people who do financing think they have it all, and then they reach Islamic finance and they have no clue what they're talking about. The people who know Sharia think they have it all. When it reaches to do structuring of financing, which also includes arbitration or enforcement, they have no idea. So I think that two should always sit on the table together to understand and appreciate that they're an ecosystem that works together and can provide better structures. That means that if I structure transaction as I know it in a finance aspect, with the Islamic finance that I know, I need a Sharia scholar to come and tick it off, maybe give a fatwa of some sort to make sure that it ticks off the different components of a Sharia. And I'll give you an example of what's happening in Uganda. We have people who have education facilities, housing facilities, that want to go into financing with the first Islamic bank. But they already have debt from conventional banks, right? And they're saying, can you come on and take on this debt in an Islamic finance structure? And the first thing they will be told is that under Sharia, we don't buy debt. I agree with you on a Sharia aspect, but there's a financing aspect. Can we structure it so that we say, in a Ugandan market, can we bring that debt in a way that it can be absorbed? And there are ways of doing it. We've gotten experts from the Middle East who have done it before and can actually be done. On training and education, we have these many times, and I thank GBS Africa for having these. It has been a long time coming. I think they stopped before COVID, and when COVID came, it has been a long time coming, but now we're here. We have these in Nairobi, we need them in Tanzania, we need them in Uganda, Somalia, Congo, wherever it is in East Africa. We need to put our hands together, we need to pull resources together to make sure this whole Sharia compliant or alternative finance develops in East Africa, because it's a way to support the SMEs, as Agnes said. We're an SME market, and for us to grow to the next step, we need people who understand this particular financing. So I call upon everyone who has a different training material. That's where my question came in. There's a gentleman, I think he has walked out, who talked about the free training materials you can access. I don't know how best you can access that. He didn't give us how to do that. But
yes, that's on the panel.
They can let us know.
Yes, you mean the free part of it?
Yes, a free part of it.
That's where the free lunch. That's where the lunch is.
Yes, a free part.
Now you got to pay for that lunch. The rest of us get a free lunch.
Thank you.
We have just about 5 minutes, so I'm just going to give you 30 seconds because you've been on the panel before. By the way, I'm sure some of those debts from the other banks could be taken to the market first, maybe to the stock market, and then you come back and do.
Okay,
sorry.
Thank you, Boston. As it's only 30 seconds, so I will give the chance to the panelists to answer the questions. I just wanted to chip in a couple of things, but that will be probably after they have answered the question. I'll just probably try to complement if required. All right. Yeah, thank you.
We appreciate that. Thank you very much. My panelists will have about a minute each, if you can manage that for me. So let me start with the regulator, as always.
Yeah, thank you. Just to answer the question that was asked on sovereign sukuk, yes, it's possible to have it issued. In fact, in the strategic plan of the National Treasury, it was, I think that strategic plan has lapsed now, but it had committed to issue 3 sukuk. Yeah, but that's where it ended. So again, it's a question of how, it's a political economy question. Yeah, if you get what I'm saying. You've got to engage the right people who are in those positions to be able to do an issuance. But just to answer you directly, Farouk will tell you that we even had a plan for it with very clear timelines as when the issuance would happen, with the stakeholders and the decisions that will be made ultimately to have an issuance happen. That was back in 2017-18. And 4 or 5 years down the line, we still don't have sovereign sukuk. But just to answer you directly, it's possible. It will take, of course, collaboration between us as stakeholders, as parties, and it's a political economic question, and I think I want to underline that. Yes, it has to come through from the very top as a decision.
I understand. Ask Nigeria. It took many years before we pushed the...
Yeah, I'll combine that with the blended finance question from my colleague from Apollo. Yes, it's well, again, I think I'll ask Farouk to speak to this because, again, I'm not an expert on Islamic finance, I have to admit. But as a conclusion, I wanted to say that as a regulator, we stand ready to give that support that is required as CMA. And of course, we work very closely with the other financial sector regulators. National Treasury is, to my knowledge, on our side. So the question is, then we need some people to make the first move to ensure that happens. Of course, there is the policy angle. Some of those decisions, as I said, are political decisions, but hopefully we are slowly walking towards the direction we want.
All right, thank you so much for that. Yes, you talk.
So for me, the young lady who asked me the question about the New York Convention, your name, your good name, please? Fantastic. Well, in that case, right. I won't. I will not be able to answer your question straight away, but what I could do is we can have a quick chat later on, and I can assist you and get you in touch with somebody who might be able to help. Yeah? Thank you.
Okay. Abdullah, you're not a regulator, no a stock exchange. You don't have a trading platform. So you're sitting on asset management. So what part of the question are you taking on in terms of my friend from Uganda when it comes to using not just blended finance, but also how to marry issues from those who have done commercial debt, then they want to step over into the Islamic finance program, and they're trying to marry the two together. The free lunch man just walked in, just for your advantage. So it's not, you're in time.
I think on the question of blending the two, it's going to be a bit difficult because number one, there's cultural differences between the Islamic faith and also the other faiths. I mean, blending the two would be a bit difficult because the beliefs and the ways of doing business are totally different. So blending the same, in the short run, I don't see it, but maybe in the long run, if, for example, it was a Christian faith, for example, we had a forum the other day and someone posed a question that if you're a true Christian, what do you think of Islamic finance? I mean, would you be comfortable your money being invested in companies, for example, that harm the people, for example, in manufacturing alcohol or some industries that actually have a negative impact on the society? So many Christians actually said that is actually unethical. But if you look at the conventional side, those are the places that actually they place their money and make good returns. So it's an aspect that is quite challenging because for some people it's a matter of reconciling their faith and financial needs. But for some people it's about financial needs. So it's a cross-culture thing that I think would be very hard, but we would see how that goes. I think I would try to talk about the issue of infrastructure and how to blend the financing. There's a proposal I think we put across as pension funds as well. I think we discussed this before on actually financing those specific projects. I think the expressway itself, we gave a proposal as pension funds. I think we came together like around 4 or 5 pension funds. We wanted to actually build that expressway and make money out of it for an unforeseeable future instead of giving out to somebody else outside the country. So it is something that can actually be done locally if there is will from the top there. I think it's something that instead of having capital flight, paying somebody from outside the country in America or somebody in China, we can actually have all these pension funds, mobilized funds, like 10 of them or 5 of them, come together, build that road, toll it for an unforeseeable future, but retain money within the Kenyan economy. Thank you.
Abdullah, you need to move very fast. Yeah, because the Chinese built the road from the Kenyatta airport, and now the Mombasa is going to be done by the Americans. You need to move very quickly. Find another project very quickly before another party takes it up. Should I give you 1 minute? Because Agnes is ready to wrap up for us. So please get my friend a microphone very quickly.
Thank you very much, Boston, for the last minute. I'll very briefly touch upon 3 things. The sister asked the question about, a sovereign green sukuk. If that's possible today, yes, it is. All the provisions that are required are actually there. It's just a question of making the decision, as Justice said. It's a political will that is required, and that political will, of course, will come from the top, but also it will come from the bottom, meaning that there is a demand, from the market players, there is a need. So does that answer your question? Second, the gentleman who asked for blended finance, there have been multiple projects, especially when it comes to infrastructure, that are blended. There is a convention between conventional, financiers and Islamic financiers as well. And there are, different ways and forms of doing it. So it's very much possible. There's no issue with that at all. And there's a lot of precedents available in different regions of the world. The last one is the gentleman from Uganda. I think you touched upon, something very important. This issue of, converting an existing conventional debt into an Islamic, sort of arrangement and so on. I think this misconception and, all these issues around is very much because of lack of awareness and lack of capacity in a new market like Uganda. But also, I think there is, a lack of standardization in the market as well. And why I say this, because, the question of Sharia interpretation, whether, this is doable or not, will be always very difficult to answer. And for that, because it's a universal problem, there is this international body called IOFI, right, based in Bahrain, who is issuing, Sharia, accounting, auditing, governance, and ethics standards. I just happen to be the chairman of its board, and we have issued actually multiple, I think there are over 104, I think around 104 or 5 standards that we have issued. And this is, the unified version of, the scholarly interpretation that is accepted across the world, right? And the purpose of this, standardization is actually help the growing markets, the emerging markets, and also, the developed markets to be on the same level and having, the same sort of interpretations, in order to facilitate, the markets from within and with cross-border as well. So I would very much encourage Uganda, as in Kenya and other, players in the East African region, to adopt and benefit from IOFI standards that are available for free again online. So you just need to go to the website and you can download from there. All these standards are available, and they are the industry standards, and they are universally accepted. So an increasing number of regulators are also adopting them and enforcing them as well. So it will be very helpful for a country like Uganda, to adopt that, as it will be for Kenya and also in Somalia. So the last thing is, our friends from FSD Africa, Vimal is back. You were asking for that free document, so I think it's downloadable in English and French, both, from the website. So there's a lot of information available. I think we just have to, have access to it. Thank you.
Thank you so much. Vimal, please give me a round of applause. And finally, Vimal, maybe you also make it downloadable in Arabic. Please. Just a little extra cost for you to make sure that happens. And you know why, so that it makes it possible for... Please, there's a microphone here for the chief at the front, at the table here.
Thank you very much. 30 minutes only. I think one, we have a responsibility to document our history in Kenya as far as Islamic finance is concerned. What I'm picking here is a lot of gaps in terms of how we have journeyed for the last 16 years. One, as Bilal has said, Lindsay is a second sukuk. It's not the first sukuk to be issued in Kenya. The first one was almost more than a decade ago. The issue of blending, it happened in Kenya, by the way. When we had the first infrastructure bond, Gulf African Bank and FCB Bank engaged the Treasury, and we were able to structure, I believe, 10% of the infrastructure bond to be Sharia compliant. And they invested about $1 billion Kenya shilling. FCB invested $500 million. The problem was in the implementation. And that's when the Sharia boards of the two banks demanded that that bond be liquidated. So the two banks had to liquidate their bond because of the issue of implementation. So I think we need to benefit from our history, and whatever we're saying, can it be done? I believe it has been done in Kenya. We went through a dormant phase, and we need to come back alive. Thank you.
Need to take off. Thank you very much. On that note, please put your hands of applause together for my panelists and their contributors, all of you ladies and gentlemen in the room. My partner Agnes will step forward as the only compliant green solution provider in the room to wrap up the sessions for us.
Thank you very much. Mine is really to thank you all for joining us today, this half day. When we started the conversation earlier in the year, Steve Owo, who is at the back here, who has been coordinating this for us, so thank you very much. When we started, this is exactly the kind of forum we wanted to bring. We wanted people to be able to have a candid conversation and to try and move us to the next step, because as you know, Vima, Jaffa and others, 2016, 2017, when we started bringing people together, we thought the talk shop will stop and we'll start seeing the results of our hard work, our investment in resources and time in making sure that the information was deployed and was shared with everybody else. So this is the kind of outcome we were looking for. Mine is really to thank every one of you, and most importantly to thank our speakers and our incredible moderator who has helped us run this show flawlessly. Thank you very much, Boston, all the way from... And to invite you to just continue engaging. We are available. We are hoping to host a technical workshop. Thank you very much, Jaffa and Yokabi, for helping us also in coordinating all this. We are hoping to host a technical program later in the year with our stakeholders, and I do hope you can reach out to us if there's anything we can do. I think we're going to have a report out of this, which will be shared with every one of you. But let's keep the conversation alive. Let's find ways of how we can support the development of our continent. So from GBS Africa and our partners, Mango Capital, who are helping us online, Spain Frontier Africa Report, and Bader. Thank you very much. I invite you to lunch. Lunch is served in the restaurant. Please join us for lunch if you're not rushing, or for prayers. Thank you again.
All right. Thank you very much. I'll just say finally for all the panelists to please step forward to the podium for a final group session. The panelists for the first panel and to join the second one, so that we have a final group. Thank you very much, everyone. Thanks for coming. Have a happy Friday and a weekend.